that sound means that we are live, and I've also got an echo going on there. Somebody is listening to the halftime report while we're broadcasting it, but we do that sometimes. We got Cody, we've got Mark, we've got Tim, and welcome out here on a Friday. Jobs report today. You've got data out of the Labor Department. You've got Trump talking about quantitative easing infinity. Oh, my goodness. How you doing today, Cody?
I saw that, and I like some things that Trump does, but when he mentioned that this morning, I was like, oh my God, you idiot. Do you not know what quantitative easing is? Which obviously he doesn't.
Now, is he an idiot? Or
No,
is
he's
he
not.
sneaky smart?
Sneaky.
What? Okay,
That's my
the
vote,
language
Mark.
itself to, I see what you're saying, Mark. I agree.
Listen, I'm no fan of Trump. I like his policies, though. As a general rule, maybe. Sometimes. Depends on what the policy is. But I think he came out today and said he wanted quantitative easing. He wanted more interest rate cuts. And the only thing I have to ask is, if we have such a great economy, why do we need quantitative easing and interest rate cuts? So, I mean, it's one or the other. It's one or the other.
Classic economic theory would tell you that you don't. Modern economic theory and the modern monetary theory believe we can print money till forever and we'll just keep inflating us till the moon, Mark. With inflation at 2.4% or whatever it is, the CPI report coming in where it is, what Trump is saying is you have room to have more inflation. So why don't you just go ahead and print a bunch of more money and increase the balance sheet on the Fed and just keep going for it? We know it's politics, but c'est la vie. I mean,
that's like when the banks are saying, hey, you make enough to get a bigger loan. Why don't you just take out more debt? Because, I mean, you can afford it. Rather than being responsible and take out the small one you're taking out, let's take out a bigger one, 10 times your income. Don't worry, you'll be able to pay it off in the future.
Well, I've debated this with Matt in the past, and I don't know why people are surprised by Trump's policy on this. This is how he ran his businesses for 4 decades.
Also true.
He literally uses debt to leverage all kinds of different things. Why wouldn't he run the economy that way? Yeah,
that's what you do. That's real estate.
That's how he got into deals with Deutsche Bank. I was reading some stuff from Deutsche Bank the other day on how he actually got some of those deals done, and he would leverage assets on assets on assets. He was not afraid to borrow. He was not afraid to print himself into the moon, Mark. Why wouldn't he print the economy?
So I just need to understand this. So a conservative these days is you print a whole bunch of money and go into a lot of debt. And a liberal these days is you print even more money. And you go, because it doesn't matter. It's all. Have you heard Bernie Sanders' campaign manager explain why you can print infinite money?
I watched a 20-minute.
Yeah, and it'll end up being worthless on the street, blowing in the wind like in Venezuela right now.
Buy gold in your long-term portfolio.
There is some real truth to that. There's no doubt about it. A personal gold system is very, very important. Let's get down to business here, boys. Let's work through the markets one step at a time.
Wait, you haven't done It's Friday Fun Day, so I can mock your Friday Fun Day.
All right, Mark.
Well, I'm tweeting out Friday Fun Day right now, so go with it.
Do you know the SpongeBob Fun song?
I do not know the SpongeBob.
No.
I'm not going to sing it on the halftime report. I can sing it word for word all the way through. It's one of the greatest things that's ever happened on a cartoon or television ever. As a father with a daughter who was of the age to watch SpongeBob at the time when it was popular, I watched every SpongeBob thing. And F is for friends who do stuff together, Mark. U is for you and me. N is for anywhere and anytime at all. Right here on the halftime report, I guess. I don't know. Look at him shaking his head. He's so disgusted right now.
Friday Fun Day.
And we're yucking it up here today.
Happy Wednesday. Happy Hump Day.
Oh, I hate that one. Don't get me
started.
But
you like Friday Fun Day, but Happy Hump Day is not your cup of tea, huh?
No, it's not.
How about you just hate them all equally?
Who's driving? Who's sharing screens? Who's going to bring up charts? Cody, Mark, me? Who wants it?
Mark, why don't you drive? I'm getting stuff done in the background, like posting and sharing.
Sounds good, brother. And welcome out, Halftime Crew. By the way, we got a lot going on in the markets today. Quite a few stocks actually flashing on my radar. We have our scouting report meetings every Friday, and we're going to be excited to kind of bring you guys new bird dog picks. If you're team tackle, welcome out. Always give us a quick like and a share. And Matthias, someone is a SpongeBob fan, Shammy. There's no doubt about it. In fact, everybody should be a SpongeBob fan. What a wonderful show. Mark, let's start with the S&P 500, if you would. And I know that you're going to bring up SPY because you're an ETF reader instead of the futures market. And I don't think we can talk about this enough, by the way. ES versus SPY. First, start with the S&P analysis. What are you seeing in the chart? And then explain why you like SPY over ES.
Well, in all the live programming we've done over the last week, from podcasts to coaches shows to Traders Lounge, there has been a common sentiment. It is this, and we're looking at weekly candlesticks, but the common sentiment we've shared throughout all of our pro products, all of everything, is this market just wants to hit those all-time highs. On the coaches show on Tuesday night, I asked Noah a simple question. I said, the only question for me is, does it do it before earnings season? And it just, I mean, when you look at it, when you look at the daily price action last week, you had a horrific potential bearish catalyst when the yield curve inverted. I mean, this is the type of thing that in many market conditions, you would have went down hundreds and hundreds of points. What happened? You had a little bit of a sell-off, some volatility, but then support quickly formed and you quickly got reversal signals to end the week. The market wants to go up. Those signs were evident to me last week when it had every reason. It had a huge, huge negative bearish storyline. And it just said, "Nyeh." And now it's like it never happened. And then the gap up this week, heavy price action. The market wants to set new highs. It wants to set new highs. It wants to set new highs badly. And now it really is, does it send those, do we hit those before earnings season, which starts, just around the corner? I believe JP Morgan, Wells Fargo, what I kind of view as the official start. You have Delta Airlines the day before, but this is coming next Friday. And then it starts ramping up more and more with each passing day. And it's going to be a huge earnings season. It's going to be a huge earnings season. But this market, it wants to hit 3,000 badly on the S&P. It wants to hit new milestones across the board. Had every chance to go down last week, didn't. And one thing I shared on the Traders Lounge this morning was price action on the hourly chart is about as beautiful as any chart you can look at. And hold on one second. Let me remove these. Is about as beautiful as any chart you'll look at. So these are hourly candlesticks. Not only do you hold hourly moving averages, which are a huge potential trading signal, support when it formed didn't budge. When resistance was broken, what became new support? That old resistance level. It just has been a textbook, beautiful trend all week long. Not a single bearish signal on the hourly chart. Not one. Not one intraday support break. Not one break of a major hourly moving average. Not a single bearish signal to even cause jitters this week.
For clarity, Marie, I didn't sing SpongeBob. I did just do a spoken word thing here. I agree the market wants to hit an all-time high, and it's just rampant for it, Mark. Q1 earnings were not good. I keep talking about this. Q2 earnings are not exactly going to blow it out the doors. In fact, based on FactSec data, and that's one of the great places that actually does a lot of earnings data and earnings expectations and stuff like that. They don't even think that the S&P is going to beat quarter over quarter or year over year, but they're going to come in somewhat in line. It's going to improve a little bit. So it's this market theory that if we're improving and we're moving forward in a better design, we can avoid a recession, and then we're going to get into the back end of the year and things are going to be good. Do you buy into any of those arguments? Number one.
We're entering a point where I think you need to suspend analysis on everything and become a pure technical trader coming up. The storylines, you could make a logical case from a sentiment, from an overall analysis standpoint, to do just about anything. I am shutting down my brain for the next few weeks completely. And I am going to trade the chart. when a market is so determined to go one direction, despite any logical reason that maybe it's overvalued, you got to trade the chart. What did we talk on the podcast this week? You got to you got to hold your nose and buy. Because I refuse to not make money right now. I'm not going to be so stubborn that I'm like, oh, but things are overvalued, but economic data. I mean, factory orders in Germany this week were terrible.
Terrible.
There's so many terrible economic points around the world. But guess what? I'm not going to make money. I'm not going to refuse to make money just because I have a bias on what the market should be doing. You only make money when you place bets in the direction of what the market does. And so it's been a plug my nose, make short profits environment.
Yeah, that's right. And you can find.
And I got a big nose. And so it is a big, I look in the mirror and it grows. I swear it keeps getting bigger and bigger and bigger. And then someone told me that your nose gets bigger as you age. Is that a true fact?
I think so.
I believe it is.
Yep.
Yeah. I don't like science.
Same thing with your ears. So I see the old guys with really long ears.
I got big nose and I got big ears. I mean, I'm going to be a walking Dumbo coming up here in 25 years, It's going to be Dumbo 2, the Disney remake, cranky old man on his porch.
I got no problem with that. The imagery is compelling there, Mark. I will tell you that.
It's sexy, isn't it? Yeah.
It is. As I look through the leadership in the S&P, Mark, Apache, Anadarko, EOG, Independent Oil and Gas is up here today. Let's look at APA, APC, and EOG.
Let's just look at XOP.
Sure. The oil and gas sector here. Why is this showing strength, and why are these stocks running?
Well, let's look at the individual commodity. You want to look at APC?
APC, APA, EOG.
All right. Well, all right. So here's a little advanced lesson on individual oil companies and oil futures. And you see this quite often. All right. So let's just do a little basic analysis, because if you're ever going to trade oil companies, you need to understand the dynamics of how they work in conjunction with the price of oil. So you have, on a company like APC, you have two dogs wagging one tail. So the two main components that move, the outside components that move APC, are is the overall stock market doing and how are oil futures doing. And so when you have a situation where oil futures have been in a nice steady uptrend, breaking resistance several times along the way, it's been actually a pretty trend, breaking resistance levels along the way, where you have a stock market that's been ramping up consistently. I mean, these are the two larger forces that impact price action on APC. So when you have an oil stock that trades within a consolidated pattern for a long period of time, when the overall trends on the market and when the overall trends on crude oil have been consistent and steady as they are, it is only a matter of time before you have a breakout situation. So you have consolidated price action going back a couple months. Nice, solid, really easy to identify sideways trend. It's only a matter of time before that pent up energy, no pun intended, but that pent up energy of that consolidated pattern gives way. I mean, the pressure's been there. Upward pressure in oil, upward pressure in the market. It's only a matter of time. And this is kind of a common phenomenon in the world of oil stocks. Trade in consolidated pattern, take a while to break out after the oil and the stock market have already been trending. But it's one of those inevitable conclusions that it is going to eventually break out. And you're just happening to see it today.
You know, 15 minutes from now, we'll be talking about crude oil. At the time, you have the rig count coming out, and production has been strong and whatnot. That rig count data, Mark, aside from economics and maybe day trading, is it something that most traders need to pay attention to?
Well, if you're an oil, if you want to trade oil, if you want to trade oil companies, and guess what? There are a lot of individuals that this is just the area of the market they focus on. That, hey, you can have fun with your Google, you can go have fun with whatever it may be. You have some people that say, no, I just trade oil, I just trade oil stocks, I just trade oil futures, and that is all I do. Mm-hmm. And you can become really, really successful with that focused data. So if you are just casually trading a stock like APC or one of these others that are breaking out, you don't need to be hyperly sensitive to all of that, because you just don't have the time to process that between everything else you're doing. Just follow the pattern, follow the chart, do that. If you're trading oil exclusively, if you're doing oil futures, then you need to be aware of the general things weighing on sentiment. One of those things absolutely is the rig count, which has kind of been declining lately. Mm-hmm. So adding to this little mini bullish run we've had this year.
You know, the other area of the market that's catching my attention here on the bullish side is biotech. Biotech's actually performing very, very strong today, a lot on the backs of leadership out of Biogen, which is a $46 billion biotech company. Mark, they gapped down on some news a couple of weeks ago. Obviously, now it's backfilling. When you have moving averages, you know, all kind of as a mess here, and you are breaking out of a resistance zone right there. Very aggressive traders could craft something here and make an argument for like, a call ratio back spread or a bull call spread or something like that. Long stock would not be on the table, in my opinion. Too much risk in biotech. But what's your read when you see a huge gap on a biotechnology company, even as big as Biogen, and then it starts to backfill like this?
All right. Whenever you have a huge gap, I mean, if you do not have strategies that are gap-oriented specific strategies, don't trade gaps. One mistake I see a lot of new traders, new investors make when they see a gap is that they get confused because normal price action has stopped. You essentially have a new chart. You have essentially a new chart. And so a lot of it will come down to time frames. For example, day traders going to hourly chart, they will look for breaks of support to go bearish, or they'll look for their version of reversal signals. Like one of my favorite day trading reversal signals is on the hourly chart where you clear the 20 hourly moving average. And remember, on these huge gap situation, I mean, look how fast they're racing to catch down. Look how fast they're racing. It takes a little while for them to catch up. But here, a few days pass, you get a nice reversal signal, which can provide a nice short-term day trading opportunity where, well, I mean, where did price go? It went, I mean, what, you could have made $800 on 100 shares day trading during that little swing. So, I mean, they can be very, very profitable. It just depends on what type of trader you are. What's your system? We certainly are seeing nice reversal. We're seeing a breakout of horizontal resistance today. We're clearing short-term moving averages. You had a really nice support level form. And so you kind of have to look at it as a new chart, new support, new resistance, new signals getting in. And if you can do that, and if you have a system, you're also breaking the gap high. So you're getting a lot of bullish signals today. A lot of reversal signals. Usually in these situations, I tend to day trade them or wait several months before doing anything. But if you don't know how to trade gaps, it's okay. You don't have to master every chart pattern out there to become a successful trader. But do realize that when you do have gapping situations, it's kind of a new chart and it's really hypersensitive to short-term breaks of intraday support and resistance.
Let's move on to the Dow Jones Industrial, if you would. Large cap companies, they've been lagging in many regards just because of Boeing, and we've got to talk about DIA here. The Dow, the S&P, the Russell, the NASDAQ, it's not like they're going to have one in a bear market, one in a bull market, but you do see relative strength and weakness depending on which one you're looking at. And I still see a little bit of weakness in the Dow just because of some of the components, quite frankly, but it feels destined to hit an all-time high here as well. Red candle, but up a little bit here today. It opened up higher. We've now backfilled Mark. What's your read on the technicals on the Dow?
I mean, they're not a whole lot different than many of the other broad market indexes outside of small caps, which have consolidated. I mean, as a general rule, the broad markets are going to trend in the same direction. Some will have more relative strength than another. You might have the S&P 500 do a little bit better. You might have the NASDAQ 100 do a little bit better. You might have the Dow Jones, but they're generally going to trend in the same direction. And so there's not a whole lot. Yes, you're going to have some funky price movement. I think that's one reason people like trading the S&P 500 a little more, is because you have 500 companies weighed into that index over just 30. Mm-hmm. But the market's strong. The market is strong from a technical perspective.
Couple of stocks standing out to me. Chevron approaching a resistance point. We've seen leadership out of oil and energy here today. We saw the S&P had the EOG and the Anadarko's all going up. It's a messy chart here for Chevron, but Chevron's more of a dividend company, maybe not a great swing trading company. I'm sure you can do it, and that would be a trigger. When you see all of that noise back there historically, Mark, but you're above moving averages, does that play into your thinking as far as taking a trade on a breakout here?
Yes, it does. Well, when you get into these companies that are primary dividend paying companies, I am not usually a fan of swing trading them. As you see, I immediately went to a weekly chart over a daily chart to smooth out some of that noise. We see that the trend on Chevron has been very strong this year. In fact, we haven't closed below that 5 EMA in the last couple of months, and so it's been a very, very strong moving chart. But these aren't my favorite trading instruments. I like buying them when they're low and selling them when they're high, actually, because I'm not afraid to own a stock like Chevron for a very long period of time with those nice, healthy dividends. But there is a point where I just don't like trading them. Once again, you have two dogs wagging Chevron's tail. You can have a nice setup on Chevron, and then you can have oil stall. You can have the market stall. Heck, you could have interest rates and have the yield curve go up, and it affect dividend paying stocks where people are less inclined to come into dividend. So you have so many external factors that can weigh on a breakout of Chevron that you're just going to have better candidates out there from a pure technical analysis perspective.
Yeah, I'll give you an idea of that. And by the way, we had a good question in the chat from Moose Lady here. Home Depot on Monday, we talked about it in the halftime report. It broke out, it took off on volume, and it's been a very, very strong week on Home Depot. When you see 4 out of 5 candles in a row and a strong weekly chart here, can you still enter a stock like this, or have you missed it?
I don't move after strong weeks like this. Let's just do a simple reward risk analysis. When we have the breakout and we catch it, and we were all over Home Depot in multiple places on Tackle Trading, not so subtle hint to come be a pro member. You pick up some great trading tips.
Shameless plug. It was on the options report. So you should have watched those reports over the weekends.
And so we do know what we're doing at Tackle Trading, and we do spend a lot of time finding these high probability setups. Beautiful setup coming into the week on Home Depot. Nice consolidated pattern for 7 weeks, clear breakout area. And we got some room to run to the next resistance level. So our next resistance level is about 215. You got some room to run. You got some room to run. So when it breaks out of that level, your reward, your potential reward is pretty decent. The problem you get into now is that sometimes when a stock runs this fast, it will take a breather, pull back a little bit as short-term moving averages are catching up, as that resistance level becomes a little closer, and it's just not as good a trade as it was 5 days ago. Now, what would probability suggest? Probability would suggest that, over the next few weeks, barring the market collapsing, that we are going to hit those highs. Mm-hmm. But our timing as traders is what it's all about. Mm-hmm. It's all about timing and precision if we want to consistently make money in the market. So waiting for a little lull and then break out of that, if you wanted to capture that upward movement, is usually the preferred way to go. Hey, guess what? If you missed the signal on Home Depot, guess what? There will be lots of other signals on lots of other stocks. You can't fret missing one signal. I know we hate it, and I know it weighs on us. But guess what? There is another great trading signal right around the corner somewhere else.
Yeah. And one might be on Boeing. We've talked about it every day. And I think if we're talking about the Dow, we've got to bring up Boeing. From a technical perspective, if you didn't have emotion in what you're looking at here, and I do, I have a bias on Boeing. I like the company. It's on my, long-term watch list, and I have a lot of faith in the value of what that company can bring. Obviously, we lost some short-term trust with that company with the news that has happened recently, Mark. Gap down on news. Settle in, find support, backfill to the gap point, and a key round number of 400. A technician might look at this and say, hey, there's an opportunity if you confirm down for a trade to the downside. Could you take that trade, or do you avoid this stock? What's your read?
You got 3 levels of resistance right now, because once again, just like we talked on Biogen, gap down situation, let's make it a new chart. Let's make it a completely new chart. You had a really nice, after the horrible situation, nice support level form. Started to get, once that support level forms, there's plenty of opportunities for the bears to send it down lower. Mm-hmm. Eventually, you're going to get a bullish rally. It's not going to just flatline here forever. If it can't go lower, well, guess what? It's going to go higher. It's going to have a rallying point. And that's what you've seen over the last 6-7 trading sessions. The problem right now is you have the old gap high, which is a huge resistance level for me. You have the round number that you talked about, 400, and you have the 50-day moving average. So you got all kinds of resistance right there. You have rising short-term moving averages creating a pinch situation. Now that term pinch is what I use to describe whenever you have resistance on one side and rising support on another is one form of a pinch. And so eventually something's going to give, but I'm not going to even begin to guess which side it's going to go to. And then let's couple in the fact that there's still investigations and situations that could cause a dramatic mini gap down from this point. Like I don't like taking a lot of risk in my trades. And so, I don't have, for example, on Home Depot, I don't have any of those situations when I have that clear breakout signal. So I guess for me is, yes, we love Boeing. We love Boeing. But why do I try to gamble in one area with so many other factors that can play in when I can go to a nice boring stock like Home Depot, play the signal without having any of that other stuff involved?
Well, volatility trader would get real complex and fancy and do something bi-directional. I'm sure you can do that. There are trades that are in the options market that if you've gone through like mentorship coaching or advanced programs, I'm sure you could find something to do. But I think the advice is dead on. I absolutely agree with it. When you have unknown factors that could play themselves out that you just can't plan on, first of all, we already have enough of those in the market and in life to begin with. That's trading. That's why we can make money, is because we're taking on those risks. But I think Boeing offers just a little bit more than I'm comfortable with personally at this time. If somebody's trading it, I understand it. But at this time for me, it's a stay away. I want to go on to the NASDAQ if we can and talk tech here. You know, so many different companies that are flashing in front of me. There's no doubt about it. There's a million technology companies, but start with the QQQ mark. Give me a read on this one technically, if you would.
There has been a little bit more relative strength in technology during stretches over the last month than there has been in the broad market. But I mean, it's really nuanced where we're at right now. So maybe a little more technical strength in technology than like the S&P 500, but it's close enough to not be a whole lot different in any reasonable analysis. I mean, price movement looks pretty much this week like it did on the broad market in technology. And that is with some of the software components that, and we've went over this in the lounge several times. There's been some funky price manipulating behavior in software companies over the last 5 weeks, where you've had sell-offs drag software down. And this is whether it's CRM or whether it's Workday or a number of other sizable components in the tech space, driving it down. Some really funky manipulated price behavior that has this is the third time it's happened over the last 5 weeks. The last 2 times led to nice bullish opportunities.
Yeah, software is an interesting one because we love so many of these companies. They're tradable, both bullish and bearish. I want you to go back to QQQ though for 1 second. I want to point out one thing that I saw in that chart. There's an old saying on Wall Street where bears take the elevator and bulls take the stairs. You know, you could, I think, overthink the market today because it's not going up very much, and it's not exactly been a runner, Mark, but we're light on volume this week. Small range candlesticks. Why is it, do you think, if you could explain this, does the bull market kind of feel like paper cuts to the upside? Very slow, very methodical, very much doji-like, where the bear market drops like a rock.
Let's go back to 2017. Let's go back to 2017. Let's see. If you were trading in 2017, you had a really nice run up at the start of the year and you had a really nice run up at the end of the year. But look at how narrow many of the candles were on the way up. I mean, this was not a market. And I mean, this was for what, 8 months, 9 months. I couldn't take it anymore. I went and traded oil and natural gas because I was like, this market is just boring me. But in all of that boredom, you had small range candles, but you had a consistent, easily identified trend. So you had a really big run up after the tax cuts. You had a big start to the year. But in between, it was just a lot of nice, steady, non-dramatic price movement. So when you get in market conditions, and for a new trader that's, let's say someone started 6 months ago, Tim, huge, dramatic. I mean, this has been the market just moves all the time, doesn't it? Huge price movement, downward, huge run up. Well, the last 5 weeks kind of looks like the market in 2017. The daily chart was not the prettiest chart in 2017. You know, you had sporadic movement at times, but the weekly chart look at that weekly chart in 2017.
Mm-hmm.
I mean, that is a classic, textbook, beautiful trend. Did not close below the 20 weekly moving average a single time. Didn't even go below the 20 weekly average. Sure, you had time periods where it moved up, but it was boring. And so like a trader that's new might look at today's price action and be like, God, this is slow. It's just, what did you call it?
It's like paper cuts. Yeah.
Like paper cuts.
Yeah.
And so if you're a new trader after the price action for the last 6 months, I can understand when you feel like it. It's not abnormal for this to occur though. In fact, when you look at the range that we're in, this is still a really popping week compared to some of those weeks we had in 2017. This is a gangbuster week by comparison.
Mm-hmm.
So it's just not abnormal market conditions to have slow and steady.
Especially in non-earnings season as we're drifting upwards in the chart and things are kind of slow and steady wins the race. There's no doubt about it. None of the major components in the NASDAQ are grabbing my attention like the Facebooks and Googles. They're all kind of flat or, par for the course here today. But I'll tell you what is all the Chinese companies, Mark. Give me a quick peek at FXI, if you would.
And we looked at this on the lounge this morning. Once again, FXI is you don't want to analyze this on the daily chart. Because of the overseas price action, you have a lot of gapping action, but things really, really smooth out when you go to that weekly chart. Mm-hmm. Trends become a lot clearer, and you have a nice, good old-fashioned breakout, short-term upward trend, 5 weeks of consolidation, really classic pattern, break out of it. It's a pretty classic pattern with a little bit of room to upside. Now, FXI is not a stock that is going to get you rich. It is, the whole range for the last year has been between 39 and 49, basically. Mm-hmm. So, but you have a little bit of room up to the upside on that. But, lot of, really bullish week. A really significant bullish signal for short-term traders.
Yeah, I agree. I mean, you look at Baidu breaking out of resistance. You look at Alibaba, two of the major names that I think of when I think of Chinese tech, Alibaba, Baidu. Baidu is broken out of resistance. Baba is approaching resistance almost for a breakout. All of this expectation on a U.S.-Chinese trade deal. And we're not anywhere near done yet, by the way. I know that there's a lot of pleasantries and it seems like progress is happening.
That trade deal, you want to hear my most recent conspiracy theory? That trade deal is never finalizing because Trump's going to realize that, oh my gosh, all I have to do is circulate good news that things are going to happen on the Chinese trade deal and the market will continually go up.
Yep. He has to do that.
All I have to do is have that trade deal not happen. And if the market's going down a couple of days, all I have to do is say something really positive about the trade deal and the market will go up.
That's exactly right.
I mean, if you think about it, Trump, if he was really, really savvy, he would never have that trade deal finalized. Because how many times this year has the market went up on the headlines, trade deal optimism?
Oh, tons. Yeah.
No, he should wait till 6 months before the election and then sign that paper.
Oh, no, that gives too much chance for a reversal. Wait a good month, get a good pop. But if you literally think about it, because of how irrational the markets are and how day traders and algorithms use those headlines to trade, this news headline has been recycled at least 20 times in 2019. Mm-hmm. Again, just yesterday, recycled again. You could recycle this headline indefinitely, and the market would use it as an excuse to continue going up. You wonder how bubbles form? Is because of irrational behavior like this. Let's ignore actual data and let's just trade on headlines.
Right. Well, I don't know if he could do that for another couple of years, by the way. I mean, when is, the election back into 2020?
You only got to do it for about 18 months.
18 more months, I guess. I mean, they keep talking about, having a trade deal done anytime soon. It's an interesting idea. I mean, maybe you should float that over there to Larry Kudlow. He might like it.
It would work. It would work. It would create a massive bubble, but it would work.
Yeah. Let's move on to RTY, if you would, and talk small caps. Small caps.
So White House, if you are taking applications, I love helping my brothers at Tackle Trading. But if you, Larry Kudlow, if you are looking for a market manipulating advisor, I got a plan on how you can escalate and create a bubble in this market and reassure a re-election.
They might be taking applications for that. I think that's how Roger Stone got his job.
Hey, I did a Star Wars personality test. Which Star Wars character do you think I came back as?
Oh, you're Darth Maul.
No, I'm not evil.
But he's both evil and good. I mean, I don't know. Jar Jar Binks.
Oh, I really do hate you.
Did you just call him Jar Jar?
I really do.
Come on. That's an insult.
Misa thinks this is my last half a time report.
Who was it? Luke Skywalker?
Boba Fett.
Boba Fett.
Right. Boba Fett's awesome.
Yeah.
Jar Jar Binks.
I still love Star Wars. By the way, my favorite conspiracy theory of all time was that Jar Jar Binks was actually a Sith Lord. I got to send the link to you at some point. This one fan, he dove deep into this fan theory about how Jar Jar Binks was a Sith Lord manipulating people the entire time. And it didn't come to play out to fruition there as the Star Wars.
I've given up on Star Wars. I thought Lucas was bad with Jar Jar Binks, and then I watched that last Star Wars movie. And
the thing they did wrong with the last Star Wars movies, they took all the cool characters from the original ones, turned them into old, pathetic losers, and then killed them.
Plus, there are listen, I could go on and on. I'm done. I've moved on. Star Wars, I've moved on.
And here's for my friend Shammy here. This is the link for that fan theory that Jar Jar Binks was a Sith Lord there from Business Insiders. I get why you would move on. I do like the lead character. What is her name? I'm not into it too much anymore, but my girls loved it. Having a strong female lead as the Jedi and kind of going for it. I see what they're doing there, and I like it. I like it a lot. It had some plot things that I didn't necessarily feel like made sense to me, but I'm not going to spoil the movie if somebody's not seen it because that one is in the last 5 years.
Hey, Tim, drop that link in our chat because YouTube won't let you do it unless you're on the Tackle account.
Oh, I see.
So drop it in our chat and I'll drop it in the Tackle account.
Here you go, brother. You very, very good. All right, Mark, move on to RTY if you would. Let's talk small cap stocks for a minute. So, IWM's fine. Yeah. Small caps have been lagging, but I've been saying this for a long time that if it breaks out, it can literally ramp up so quickly that you have to be cautious here, guys. If the market does go bullish through earnings season and it breaks out of resistance on the small caps, they are higher beta than large cap companies, Mark.
Yeah, they actually have more room to the upside. I mean, when you just evaluate where resistance levels are, you just have more room to run. Mm-hmm. You just have more room to run on a breakout of small caps than you have on the broader market.
I agree with that. There's a few small cap companies that are catching my eye here today. One is Blackberry, actually. The fact that it's a small cap tells you a lot about where that company is gone.
BBBY. No, that's
used to be. It used to be. It's BB now. They've changed. BB. Blackberry. Now you'll notice the weekly candle, strong white candle.
You can see how long it's been since I traded Blackberry.
Yeah, me too. But it grabbed my eye when it had the earnings last week. It jumped out on that earnings, gapped out on strong product sales and service sales. Market actually, the numbers were good. You'd have to dig the report.
I'll tell you why. Wake me up when this consolidated trend ends that's been going on for 6 years. Okay,
it's been an underperformer.
No, look at that. I mean, looking at monthly candles, look at that trend. Yeah, wake me up when that breaks. I'm not interested until that happens.
Sounds good. Let's see if I can get you interested in Twillo, TWLO.
Ah, yes. Now you're talking my language.
Deeper retracement on the weekly and monthly chart. You're coming into some moving average zones that matter to me. There's no question about it. Little light range candlestick here today. It took it on the chin like all the different application software companies did yesterday when they were all selling, Mark. Any interest in Twilio here?
Yeah, in fact, we talked about Twilio on the, here, let me find, I got to find my time frame. I got to go to, I got to find my, I'm not going to be able to, here we go. This is what we talked about on the halftime report earlier today. Okay, so we have our last previous big sell-off. So we've had 3 major sell-offs in software over the last 5 weeks. Big sell-off. And we talked about this pattern forming a nice consolidation pattern on the intraday chart. So you have a nice sell-off, and there you have really beautiful hourly candles forming a really tight consolidation pattern. You break out of it eventually, break out of that consolidation pattern, and then Twilio ran 13 bucks, like in a matter of days. So ideally, whenever we have a sell-off of any, I like to have some kind of consolidation pattern form. Can sometimes take several days, and then have a breakout of that consolidation pattern. And then that leaves a lot of room to the upside. So right now, similar type situation. We're at the beginning stages of it, big sell-off. Nothing on Twilio, it just got drugged down with everything else. And so now have that consolidation pattern form over a few days, have a breakout, and then I'm very interested. So that is the specific pattern I'm looking for, some sort of consolidation pattern on the intraday chart, and then a breakout of it. So that is the pattern I am looking for on Twilio right now.
Another company grabbing my eye here is Snapchat, SNAP, another small cap company, but relatively very high volume today, 2 relative volume for every 1 that it normally trades. It's got a big movement going, Mark. We're now above moving averages. They just announced a lot of new product releases, and here's the thing about Snapchat. I don't use Snapchat, but their tech, they're very popular. And I know that after their IPO, they took it on the chin for a long time, but that's par for the course these days with IPOs. Any interest in Snapchat as it's developing a new uptrend?
Your best signal on Snapchat occurred earlier this year when it cleared above the 20 weekly moving average. And then we see that huge, gigantic movement upward. I mean, you've ran what? You've doubled this year.
Mm-hmm.
I mean, where were we? We've almost doubled in price this year. That doesn't mean it can't run more. There's certainly, from a technical analysis standpoint, nothing standing in its way. I just don't like anything that Kylie Jenner's associated with. I'm such an old fuddy-duddy. But from a technical perspective, I mean, you got a lot of clear air to the upside. You don't got a lot in the way. So barring Kylie Jenner, I got no problem with the chart.
You're good with that. I gotcha. Move on to the dollar, then commodities as we keep working through our daily routine. If you would, obviously the unemployment report was very good today. Not too strong, though. They called it a Goldilocks report for a reason. Mark, we have the best jobs numbers in 49 years. Okay. Now, some of that could be economics in simple regards. We live in a gig economy where if people want a job, they can have one. And if you're looking for a new job, you could qualify for unemployment, but we're not seeing.
I don't want a job and I still have one. How does that work?
It just works that way, my friend. What was your takeaway from all of the jobs numbers? Average hourly earnings were down 0.1%. Non-farm payrolls increased 196,000.
It wasn't a great report. It wasn't a bad report. Now remember, when a market wants to trend, as long as things aren't bad, it's going to just keep on trending. Mm-hmm. I mean, a lot of the payroll numbers added today were part-time employment gigs. As the wage number showed, declining wages. I mean, but it wasn't a bad report. It's not like it showed anything negative. Those unemployment reports have literally probably been one of the main reasons the market has had as much confidence as it has had. The Fed has our back and unemployment is great. So those two facts probably are the foundation of, if you want to analyze and understand the confidence the market has right now, those two things are probably the foundation of market confidence right now. And so as long as the numbers aren't bad, that confidence doesn't get shaken. So moving forward in the month, well, the Fed's not going to change. If anything, it's going to bow to pressure from Trump and become even more dovish. Well, we have a whole month with, once again, that foundation. Other economic data might come out that's not good, but as long as that unemployment's there, number's there, it's going to give the market some confidence. And so we got that out of the way for this month. So, you know, that's a big win for the bulls.
Yeah, I agree. I think it's a little bit misleading, though. You know, people will pound the desk and they'll talk about how strong the economy is. They'll point to unemployment and the low unemployment rate, and they don't realize how it's calculated. You know, and the fact of the matter is, you have an expanding gap between the haves and the have-nots when you look at the actual raw
Hold
numbers
on 1 second.
of people who've built wealth.
This segment of the Halftime Report brought to you by Bernie Sanders for President campaign.
You're going to make me cut this video.
2020. All right, Tim, go ahead.
I'm a capitalist.
Tell me more about the haves and the have-nots.
I am a capitalist, and even conservatives are complaining about this, Mark. I mean, when you have a middle class that can't necessarily pay their bills, the cost of living is going up. Inflation is a real thing. Over the last 20 years, we have about 50% inflation built in to what it costs to actually just pay for stuff. And when I see average hourly earnings for workers going down 0.1%, it doesn't exactly inspire me to want to go out and get a W-2 job, Mark. Okay. I think entrepreneurship and investing is there for a reason, right? You know, I look at a strong jobs market, strong economy in that regard. I'm not going to take anything away from it, but I do think it's misleading because you have people that are part-time workers. You have companies that are not necessarily even giving them full-time benefits. I get all of these different things. There's a lot more to this than just saying we're at 3.8% unemployment and we're at a 50-year low. I don't think you can just make it that simple. It's more complex than that. That's an opinion of mine. It is what it is. Yes.
But fortunately for the market, all the market cares about, the market's cold-blooded. The market's cold-blooded. It just cares, is that number good enough?
I agree.
And then if it is, let's keep on going up.
It is a cold-blooded market. Let's move on to crude oil, and the light sweet crude actually green today, 0.9% to the upside, showing strength. Carry through, Mark. You're going to be doing the commodity report this weekend, so you're going to do a deep dive on crude. Give us a simple analysis, though, just on the candles, the charts, and what you're seeing.
From a technical analysis perspective, you've had really clear resistance areas form. You've had two over the last 2 months. Really clear resistance areas form, followed by breakouts both times. And so from a technical analysis perspective, it's been a really clean chart. Sideways movement, resistance breaks, legs up. This week, breakout, leg up again, and now we have another resistance level forming. So it has been a rinse and repeat pattern for the last 2 months. I mean, you could dive into the sentiment. I started commenting a few weeks ago how sentiment was certainly in the bulls' favor in the commodity force, but you didn't have to literally read one word about oil. This is the beautiful thing about technical analysis, is you literally could not know anything what's going on. You could know nothing about Saudi Arabia production cuts and wanting to hold them. You could know nothing about rig data. If all you did was look at the chart, you've had a couple really clear, profitable short-term trading signals. All you had to do was trade the breakouts, do a little swing trade, get out, do a little swing trade, get out, and made a lot of money. And there's room to the upside now. I mean, we don't have anything in the form of any significant resistance level to the upside. So we are in a clear air environment. We're in an environment where Trump will start tweeting a lot more. Will start tweeting a lot more, as he has, that oil prices are getting too high. Trump is say what you will about Trump. Don't particularly like the man, but I have a lot of respect with how he understands what it's going to take from a election standpoint to get reelected. He is a much better politician than I thought he would be. And he has got it down. He has got it down. He knows what it's going to take to have reelected. So as prices get elevated, don't be surprised if the rhetoric from Trump gets ramped up quite a bit.
But where does this ignorance come from? I mean, it doesn't even make sense to me. How can somebody complain about oil prices and gas prices when unemployment's at 3.8%? I mean, they go hand in hand. Economics are pretty simple. With people, when people have jobs and they're working, they can pay for stuff, they can fill up the pump. And so there's demand for oil, right?
Well, but you go back.
How much of it is ignorance and how much of it is him speaking to the public in words the public understands?
Who likes higher gas prices?
Exactly. So he may not be talking about
it is a total cross the aisles winning rhetoric argument.
Exactly.
I get the rhetoric, but the reason gas prices are higher is because you're at the pump filling up and that you have a job that can pay for that gas. It's demand and supply.
You've already gone past when most people would listen.
I get
when you
it.
try to start stating that, people don't listen past it. People listen to 3-word little quips. High gas prices. Gas prices too high. That's all I hear.
They don't like it. And they don't like it at all. In fact, before the economy collapsed heading into the 2008 election, McCain had been, in fact, let's go back. Let's go back in time. Oh, this won't let me go back 20 years. Anyways.
I think I just figured it out. I listen to this before you, and then you can go ahead and go off on this.
Caution, Tim's about to drop some knowledge, guys.
It is because they feel the pain of higher prices before they feel the reward of a higher paycheck. So they see the higher prices happening in front of them as the prices go up and down. It's perception. You drive past the gas station every day. You see the prices go from $2 to $2.10 to $2.20 to $2.30, but your paycheck doesn't go up that fast. It's not like you get a raise every week. So
yes, but also humans will work harder to avoid pain than they will to gain pleasure. So the paycheck representing pleasure doesn't mentally make them feel as good as the idea that they're avoiding pain of having to pay at the pump.
I get it. Anyway, Mark,
it's a winning political argument.
Yeah.
It is a winning political argument. Nobody likes high gas prices.
Well, Exxon oil.
You're long APC. Then you want to see those rising oil.
Or you're long crude oil. Yeah, for sure. Traders do.
Then you love. That's what I tell traders. I'm like, listen, you can't go long APC and then complain about gas prices at the pump. That is the one thing you can't do. If you're making $800 on 400 shares on a day trade on APC, guess what? You can pay that extra nickel at the pump.
Yeah.
But they'll still complain about it. That's how much they hate high gas prices.
Couple more, and then we're going to wrap up the halftime report. Gold and then Bitcoin, actually. I want to talk about Bitcoin because it is running here, Mark. Gold and the metals market are kind of flat, and this pattern is very, very ugly. That's a head and shoulders pattern sitting on support. I love the precious metals. I love all things shiny. Don't get me wrong. They're one of my favorite things to watch and trade and all those types of stuff. And you can make the long-term argument till you're blue in the face. But technical analysis on its own, that is a not good chart. Well,
here's the thing. If you get another round of quantitative easing, there is nothing but huge clear air.
Yeah.
Like the big trigger in gold, when gold skyrocketed, was not the economic collapse in 2008, 2009. It was the turning on the printing presses and the quantitative easing programs that led to gold's just absolute stellar couple years.
Mm-hmm.
If you do have another quantitative easing program, and whether it's Trump or the Trump in 2020 or the next president, there's a propensity that, hey, something might, you think about how insane this is. Something might be not optimal, so let's print more money and buy more bonds. Because something might be wrong. That's the mentality we've entered. So it is not a question for me of if, It is a matter of when another quantitative easing program happens.
There's no doubt. I've already been convinced of this a long time ago. And you know what put the nail in the coffin for me, Mark, is I was recently studying, I was in an economics class and in a graduate program, and I'm studying, economic theory. And I was doing all of the peer research, an actual scholarly research. Every one of them that are talking about QE are talking about new ways. These are the academics. And by the way, people that think academics don't have an impact, they absolutely do have an impact. And they were all talking about new ways to use QE type theory in more modern ways. Academia, politicians, government, institutions, they're all trending towards this idea that money can just be created and created and created. And if you have the US dollar, especially as the number one world reserve currency, we have control over those things, Mark. And I'm seeing it trend in those ways.
No, and that's the thing is in my research of it, you have some individuals saying, well, there's going to be hyperinflation, not as long as the US dollar remains the world's reserve currency. And so it is only a question of, as long as that happens, there is some validity to some of these theories.
Mm-hmm.
But isn't there a natural limit to everything if you abuse it?
They don't.
My goodness, so. I hate going down. Hey, what was realist? I mean, I don't like things that could potentially, on an outside chance, lead to the collapse of the modern economic system as we know it.
Sure. I mean,
I'm not an anarchist.
The ancient Greeks would have called it hubris, right? It's this arrogance that new thinking and new ideas, that it's different this time and that we can just do whatever we want. We have seen history, show us that if you do print too much, it can become a problem. I'm with you. I'm with Matt. I understand it. I just don't think they're going to change their policy. Trump today, I mean, this, we were making light of it, but it's got concern written all over it. The fact that they're willing to go in that direction.
Yeah, and so that's why I own a little bit of gold or my long-term portfolio. Yeah. And I don't care what the short-term chart. The short-term chart's ugly.
Last one, Bitcoin, old man. I want to talk to you
signal.
about
I haven't even looked at Bitcoin.
/BTC, the futures.
Isn't this going away?
Not
Are they taking this future contract away?
They might. XBT is around. You can look at either one. XBT.
There was one exchange that pulled it off the futures. I can't remember.
It got pulled off. It might be this contract that's going away in June, actually.
So let's assume you don't know what this product is and you're just looking at the chart.
Mm-hmm.
What do you see?
I see a nice consolidation pattern that had a really nice breakout of resistance and then ran. If you go to a hourly chart, I mean, that's an explosion upward out of that resistance. I don't know what the trigger was.
Somebody came in and had very orchestrated buy orders across different crypto exchanges.
So it was manipulated.
Institutional buying that wanted to drive the price higher.
Yeah. All right, CBOE, the last Bitcoin futures contract will expire in June of.
Yeah, I thought I read that it was in June.
19th, yes.
Is the CME pulling theirs as well?
No, they are not.
No, the CBOE is the one pulling, not the CME.
Yeah.
They're like, oh, that Bitcoin thing was cute. Well, we're not going to do it.
Well, you could go buy tulip bulbs instead.
Interesting. Mark, charting wise, this has bullishness written on it, especially if you break out of that pivot.
But here's the problem. When you go up 20% in 2 days, you've entered a different world.
Parabolic.
Yeah, I mean, standard technical decision making. It's like we talked about when we start to come full circle. When you have these huge price movements, whether they're gap or a parabolic move in just a couple of days, normal trading signals and environments, that playbook you have to almost push aside, and you got to break out your playbook for this type of situation. Mm-hmm. And so most people don't have that playbook, to be honest. And so unless you have expertise, I mean, there's just going to be a lot of price movement one direction or another.
Yeah. I'm interested. I got to tell you, I'm going to be watching and doing a little bit more looking into the crypto markets. I think that I think it's a little premature, obviously, to do anything here. but I am interested. I've always been interested in these markets, even before it exploded.
This segment brought to you by the Beanie Baby bubble of 1999.
Yeah.
It can happen again. High stuffed animals are in McDonald's Happy Meals. It's building the momentum for the next Beanie Baby bubble. That's what I see here.
All right. Beanie Baby. I wonder if they track the prices of Beanie Babies, if we could chart it. Maybe there was a Beanie Baby index somewhere that we could take a look at. I'm not sure. I never owned one. Bitcoin is not a collectible. I don't know what it is in terms of
what is it?
Pure economic value. It's a transfer of, it's a mechanism. It's technology. It is the ability to move money from one currency to the other across borders without banking restrictions. It's a lot of things.
I will be interested when I can go to my grocery store and buy something with Bitcoin. Then you'll have my attention. I got too many other things to focus on.
You can do that. You can literally do that today.
There are definitely a couple grocery stores, mainly in the major cities. I don't know if you can do it in Utah.
First of all, you can get a credit card that's tied to your Bitcoin account. There's all kinds of, you can literally do that today.
Tim, you were born 20 years too late. You would have been a great millennial. Bernie and Bitcoin. B&B forever.
Well, we did look at Blackberry today, so we brought the old school back.
B&B.
B&B. All right, guys. Thanks for joining us here on a Friday fun day. And we did have a lot of fun. Hopefully you did too, and you learned some things. I'll tell you, I really enjoy coming in and doing the halftime report. It's always a lot of fun. Mark, great job today. Cody, great job. We've got reports to plan and we've got work to do. And if you're tackle trading and if you're team tackle, make sure you get in the game and watch those scouting reports on the weekend. We're going to have a lot of good content ready for you tomorrow and get you set up for the rest of the week. Any last thought here, Marky?
Friday Fun Day should be abolished from the English language. Friday Fun Day.
Well,
Friday Fun Day.
What would you rather have it be, Mark?
I don't like these little sayings. I don't know. They just bug me.
We should do like a annoy Mark Monday.
See, but there's not that rhythm to it.
You remember that old
Cody? I promise you and Tim annoy me on Monday, regardless of how you name it.
All right. Okay.
Do you remember that old skit on Saturday Night Live, Deep Thoughts with Jack Handy?
Of course.
We'll have annoyances with Mark Justice. He'll be able to list out all the things that bother him. You know, Beanie Babies.
You know what really grinds my gears?
That's right.
Everything.
All right. Great job, Marky.
Everything annoys me.
All right, guys. We are
Everyone have a good weekend. Scouting reports for pro members. We'll have them out tomorrow. We're going to go meet on them and have our Friday powwow here in a couple hours.
Our Friday.
See if we can find you more Home Depots.
So then read those reports.
Pro member, send me a message at Team of Tackle Trading. I'll get you hooked up with a nice membership that if you are not a pro member, that you get a few extra days above those 15 you normally get. Send me a message, Team of Tackle Trading, and you get to see all those nice setups like you did on Home Depot.
And finally, in the chat, Mad Mark Monday. We should make it a thing.
Ooh, Mad Mark. God. If only I was as good looking as a young Mel Gibson without the racist undertones. You know?
All right, we're out, guys.